Greetings to everybody who are watching this lecture. We learned a lot about cash flow statements in the last two classes. Today, we will start with preparation of cash flow statement under direct method. Question number 1. The following information is available from the books of Accounts Portal Limited for the year ended 31st March 2022. Number 1 information, cash sales for the year were rupees 10 lakhs. When I prepare cash flow statements, my entire objective is to have keen attention on cash inflows and cash outflows. I am not bothered about my income. I am not bothered about my expenses. I don't bother whether it is an asset or a liability. What is my bother is the cash flows. So when I prepare a cash flow statement, I have to focus completely on cash flows. Now, as I already discussed earlier, the cash flows can categorized into A. Cash flows from operating activity, B. Cash flow from investing activity, C. Cash flow from financing activity. So these are the three categories of cash flows we have understood. Now in this question, wherever there is a cash flow, we will come to this statement and write it down. If it is a cash inflow, it will be a positive figure. If it is a cash outflow, it will be a negative figure. If it doesn't affect cash flow, we will not write anything in cash flow statement. And whichever cash flow is there, we have to categorize into operating activity, or investing activity, or financing activity. To start with number 1, cash sales 10 lakhs. Now, when we sell goods for cash, we get cash. Is it a cash inflow or an outflow? The answer is cash inflow. Now, sale of goods is our operating activity or investing activity or financing activity? Operating activity. So, can I write under operating activity, cash received on sale of goods, how much? 10 lakhs. The answer is yes. Next, in the same point, and sales on account is rupees 12 lakhs. Sale on account means credit sales. When I sold the goods on credit, will I get the payment immediately? Does it have any inflow of cash? The answer is no. Therefore, I should not write here. Next, the second part of the problem. Payments on accounts payable for inventory totaled rupees 7 lakhs 80,000. So it is a payment. Accounts payable means payment to our creditors or suppliers. When we make payment to our supplier, what kind of cash outflow it is? It is operating or investing or financing. Yes, again you got it right. When you make payment to the supplier, it has to do basically with your operation or operating activity. So I will write here cash paid to creditors or suppliers, and the cash paid is how much, Nana? 7 lakhs 80,000. Because it is outflow, I am writing in the bracket thereafter. Third point, collection against accounts receivable with 7 lakhs 60,000. That means we collected from our customers. Cash received from customers or debtors is again a operating activity. So cash received from customers, that is basically our debtors are customers, and because it is a cash received, it will be positive figure 7 lakhs 60,000. So next, rent paid in cash rupees 2 lakhs 20,000. Outstanding rent is 20,000. If you ask me, sir, what is total rental expenditure? 2 lakhs 20,000 is paid and 20,000 is outstanding. Total expenditure is 2 lakhs 40,000. We should not write 2 lakhs 40,000. We should write whatever related to cash inflow or outflow in cash flow statement. We have cash payment towards rent 2 lakhs 20,000. Paid is what? Financing activity or investing activity or operating activity? Yes, you got right this time also. It is a operating activity. So cash paid towards rent 2 lakhs 20,000 because it is a cash paid. It is a outflow. Write it in bracket 2 lakhs 20,000. Then fifth point, 4 lakhs equity shares of rupees 10 par value were issued for rupees 48 lakhs. So whatever is the face value, I don't mind with that. It is not important when we prepare cash flow statements. For us, very important is by issue of shares, how much cash did we receive, and it is very clearly said issued for 48 lakhs. So we will receive 48 lakhs rupees by issue of shares. Now, is it our business to issue shares or is it our investing activity? Did we buy any asset? The answer is no. It related to raising of funds. It relates to long-term liabilities. Therefore, it is a financing activity. Under financing activity, we will write cash received on issue of shares 48 lakhs. Because it is cash received, it will have positive figure. Likewise, the sixth point now, equipment was purchased for cash rupees 16 lakhs 80,000. Purchase of equipment. Is it our business, dear students, to purchase and sell equipments? The answer is no. Does it fall under investing activity? The answer is yes. So purchase of fixed assets should classify under investing activity. Equipment purchased 16 lakhs 80,000, and because it is cash paid, it's an outflow represented by a negative figure right in brackets. Seventh point, dividend amounting to rupees 10 lakhs was declared but yet to paid. Dividend is declared but not yet paid. When dividend declared but not yet paid, where is the question of cash flow? It doesn't come into cash flow statement. Eighth point, 4 lakhs dividend declared in the previous year were paid. Now, whether it is declared in past year or 10 years back or 100 years back, it doesn't matter. When we prepare cash flow statement for the given period, cash inflow or outflow, it may related to 100 years back. It doesn't matter. Dividend paid result to cash outflow in the current year. What is the cash outflow? 4 lakhs. It is to be included under financing activities. So dividend paid 4 lakhs. Next item, an equipment having a book value of rupees 1,60,000. Book value means the value of equipment in books of accounts after depreciation. The net book value was sold for rupees 2,40,000. Book value is 1,60,000. It is sold for 2,40,000. So there is any inflow or outflow? The answer is there is a cash inflow, sale of equipment. Is it our business is to buy and sell equipment? The answer is no. Sale of equipment is an investing activity. How much cash received? Is it 1,60,000 or 2,40,000? 80,000? Nothing to do with book value. Nothing to do profit made on sale of equipment. We are talking about cash flows, and therefore cash received on sale of equipment 2,40,000. And the last item, cash account was increased by 37,20,000. That means in this period, cash generated rupees 37,20,000. From where I will answer probably in 1 minute. Now, these are the activities. Now, we will close and find out what is our net cash flow from operating activity. Please total up. So 7,60,000. Net cash flow from investing activities 14,40,000. That too negative figure. And the last item, net cash flow from financing activity 4,40,000. So from operating, we got 7,60,000 positive figure. Investing negative figure in investing activity, and from financing activity positive figure. So what is the net cash generated during the period? On whole, A plus B plus C. So 7,60,000 minus 14,40,000 plus 44 lakhs. 37,20,000 is the net cash generated during the period. All the activities put together. That is why the question says last line, cash account was increased by 37,20,000. This method of preparing cash flow statement is called as direct method. Generally, opening cash and cash equivalents, closing cash and cash equivalents given in the question. The difference between two is nothing but net cash generated during the period.